If you buy the right property at the right price and manage it well on Airbnb, the returns are 2 times or sometimes 3 times of what you get through long-term rental.
If you buy a property of $700,000, we're going to do our numbers, we're going to do our due diligence, negotiate. Once our offer is accepted,
We are traditionally told either you buy residential assets for growth or you buy commercial assets for cash flow. But it doesn't have to be that way.
and we've just done a bank valuation for all the properties which we have bought in the last 6 months. Most of them, I would say 100% of the properties are sitting on about 17% growth.
So we have been hosting properties on Airbnb for good 4 years now. We are Airbnb host first, then buyer's agent, then investors.
So all what Bhavesh said, hospitality business, pricing, cleaning, etc. You don't have to lift your finger. This is all done. This is a one-stop shop.
If you buy any property anywhere in Australia, it tends to double in 10 years time.
If you invest about 50,000 renovation, that gives us roughly about $120,000, 2.5x return.
Long-term rental basically is you signing a 12-month lease in a particular property and your rental is limited, like it has got no upside.
The very first year for an investor, it made $97,000 as gross. How cool is that?
Buy right property at the right price. Second, positioning it well. And the third and the most crucial one is
Because the vacancy rate in Tasmania right now about 0.4%. Deadly red.
this property is going to net 100,000 plus every year.
This is only possible if you buy it right, set it right, operate it right. And that's where Jasper comes in the picture.
First of all, thank you so much. We really appreciate it. And one thing I learned long back in my career was the most expensive thing that you can ask for anyone is their time. So you have all given us your time on the Friday evening, not having a beer on the bar and listening to us. We really appreciate it. So the whole intention here is to introduce you to one of the investment strategy based in investment in real estate, leveraging Airbnb. So best case scenario, we work together, and the worst case scenario, you walk away with a new form of strategy that you learned today, and you can ask a lot better questions to someone you plan to work with, if not us. Sounds fair? So what we do is, quickly, just to give you a quick introduction, my name is Bhavesh. I am the founder of this company, Jasper Advocacy. I founded this company 2 years ago with an intention to increase the awareness in the marketplace about how Airbnb is one of the most lucrative strategy when it comes to investment. So when we talk about cash flow through real estate, we have got 4 general options in Australia. Whether we talk about commercial real estate, NDIS, co-living and rooming housing, and the 4th one is Airbnb. My opinion could be biased, but I feel Airbnb strategies beats every one of them in a significant way. And during this whole presentation, once we go through it, I have a strong belief that we all will be in the same page. So let's go ahead. And the whole intention right now here is to give you enough value, educate you about this strategy, and then we go from there. Gary, you want to give yourself a quick introduction?
Yep. Hi guys. My name is Gary Parmar. Look, I've been here in Australia for 10 years. Working with Jasper Advocacy as a co-founder from last 2 years. Joined Bhavesh as so he signed me up as a client, and then here we working together. Myself, 2 years ago, I was working in a job. I was in a 9-to-5 job, and then I started doing Airbnb with my investments, and now rest is the history. So I run along with Bhavesh 2 businesses. One is the buyer's advocacy, where we buy investment properties for investors. And second is the Airbnb management company, which I run along with my wife and Bhavesh. So the purpose is, if I can do it, I think everyone can do it. And that's exactly what we're going to share, how it changed my life, Bhavesh's life, and our partner's life. That's exactly the fundamental is not doing 9 to 5 anymore, doing business day in, day out.
Perfect. So let's go ahead. So, just to keep it a little bit interactive, you want to raise a hand talking about if you already own an investment property or you're planning to buy one. Right? Now keep your hands raised if you feel like either you get cash flow or capital growth. To keep it easy, either you get residential assets for growth or you buy commercial assets for cash flow. Is this what you think? Perfect. So this presentation is exactly for you guys. Rest of all, we can collaborate in some or the other way, but those who kept their hands raised, this is exactly for you. So the whole intention is most investors face two challenges to scale their portfolio. Not buying one property, two properties. We're talking about creating generational wealth and creating positive cash flow, like good enough passive income so that you can move towards early retirement. So to achieve that, there are two major concerns investors face, either cash flow or the capital growth. So you need both. But as an investor, we are traditionally told either you buy residential assets for growth or you buy commercial assets for cash flow. But it doesn't have to be that way. The whole strategy here is our core value proposition is we buy residential assets, looking at the data, understanding the growth market, and leveraging platforms like Airbnb, Booking.com, Stays, VRBO to maximize its cash flow. So now it's not just a real estate business anymore, it's more like a hospitality business. By investing in our value proposition, you are basically buying a small piece of your own hospitality business, right? And talking about how we do and what we have done exactly, we'll walk you through this. This is the whole agenda of this meeting, and that's the reason why we're here. So why we are a bit obsessed? Like, you must be thinking, two young guys coming here talking about property investment, why the hell should you listen to us? Fair enough. On a Friday evening, I won't be sitting. It's difficult for me to convince myself to listen to someone for 30, 40, 1 hour, right? So it's legit, your concern is legit. But why we are a bit obsessed, just to give you a bit of a context, we have been hosting on Airbnb long before we started investing and telling people where to invest and how to invest. So we have been hosting properties on Airbnb for good 4 years now. So we are Airbnb host first, then buyer's agent, then investors. So, just like anything in life, once you keep on doing something for a brief period of time, you develop an insight around it. So being a host, seeing the industry from other side of the table, you realize that making a small tweak changes here, how can it grow your revenue significantly higher or drastically lower, right? So few changes here and there can change the whole game of your investment strategy. And being an Airbnb host, we have been there, we have done that multiple times. We do this day in, day out. And I hope you see the whole value why we are here. And we have been mainly buying across Tasmania and regional Victoria. The reason being, talking about the previous slide, the challenge of capital growth and cash flow. So there are 15,000 suburbs in Australia. At any given time, a few of them outperform the national average. So the national average is 7%, looking at the 40-year history. So saying that if you buy any property anywhere in Australia, it tends to double in 10 years' time. So you buy a $500,000 asset, it will be $1 million asset in 10 years' time. This fact is coming from a 40-year of historical data, right? So now, as I mentioned, any given time, there are a few suburbs which outperform the national average. How it happens? It happens looking at the factors which make any suburb investor friendly, right? We're talking about vacancy rates, rental yield, auction clearance rate, demand supply ratio, renter to owner proportion in a particular suburb, owner occupier to renter proportion. So these factors make you, if you can understand the data, you can look at and identify a growth market and invest there. So you end up getting more than national average. And then when you mix it with Airbnb, leveraging Airbnb for cash flow, we're looking at good 15 to 20% return on investment. So talking about long-term and short-term rental, long-term rental basically is you signing a 12-month lease in a particular property, and your rental is limited, like it has got no upside. You fixed a lease at a particular amount per week, and the vacancy rates comes in chunks. Whereas talking about short-term rental, we're talking about buying a same residential asset and putting it on Airbnb and Booking.com. So you lease out your house to tourists, families between homes, corporate workers coming to the city or coming to a place for work, for leisure, for pleasure, number of reasons. So for short-term rental, we talk about, again, the revenue is managed on a daily pricing basis. So the whole intention is that you optimize the calendar throughout the year and you maximize it on the hot dates of the year. When I say hot dates of the year, we mean school holidays, Easter break, any event, Christmas, New Year, number of things. So the way it works is, out of 12 months, 3-4 months are okay. 3-4 months are good, and 3-4 months are very good. So when you take a 12-month average, the returns are 2 times, sometimes 3 times of what you get through long-term rental. So the upside is long. So enough of the fluff. Let's talk about the numbers over here, right? So let's just say you buy a $700,000 asset. Let's assume you borrow at 6% interest rate and you use equity from your current investment. So basically you borrow 100% of the amount of whole $700,000. In long-term rental, let's just say your house is leased at $600 per week. You get total rent of $31,200. Once you pay council rates, your insurance, your interest payment, looking at it 6% at $700,000, you pay your management fee. Overall, your bet right now over here is the property, this $700,000 property will be $1 million in 5 years' time. But in the meantime, you are negative $17,000 every year. So it's a gamble, but again, it's a good gamble. So you put out $15,000 to $20,000 every year out of your pocket, either through your salary or your business income, with an intention this $700,000 property will be $1 million down the lane. So when you look at the bigger picture, it's good. Your bet is on the growth, and in the meantime, you compromise on the cash flow, right? Whereas, let's take the same example of the same $700,000 asset, leveraging platforms like Airbnb. So at an average daily rate of 300, at a 70% occupancy, let's just say you buy a house, it gets goes rent out for $300 a day. At a 70% occupancy, at a 255 days, your revenue is $76,000, right? How we achieve that? We're going to walk you through how exactly do we get that. But for the purpose of this exercise right now, you get this revenue with the same council rates, insurance, interest payment, management fee. Management fee, if you look, it's a bit higher on the short-term side, but still it's factored in, right? You look at everything, in the same case scenario, you're $16,000 green, like positive every year. So the whole difference is $16,000 positive in short-term rental and $17,000 negative in long-term rental. Again, this $15,000, $20,000 is not a very big amount, but you're an accountant, sir, you would know from a scalability point of view, everyone is an investor in the room. Everyone knows that $15,000, $20,000 positive cash flow is not a very big, it's not going to make a significant difference in your life. But when we're talking about scaling your portfolio, it is going to make a significant difference. Once you can provide good enough evidence to your lender that property take care of its own, getting more serviceability, getting your lending, puts you in a way more favorable position. Do you agree? So now, this whole strategy, we talked about all the good parts. Good capital appreciation, good cash flow and everything. It's achievable, and it's only achievable when we make sure we tick 3 boxes, which is buy right property at the right price. Second, positioning it well. You knowing who are you making this Airbnb for, knowing your target audience, and positioning it well, optimizing it well. And the third and the most crucial one is managing it well. If by any reason one of the 3 boxes is not ticked, the whole strategy goes to drain. So instead of achieving good returns, you may end up in negative. So you have to make sure that you tick these 3 boxes, which is buying the right property at the right price, that's for sure, setting it up right, know whom are we targeting it for, and third, operating it professionally. When I say operating it professionally, what I mean is it requires a lot of operational efficiency. It's a hospitality game from now, right? You require guest communication, cleaning coordination, pricing optimization. So you need to operate it professionally to achieve this sort of results. So we talked about data, we talked about how we identify this property. Just to give you a context, all of us are investors in the room. Are you aware of the software like CoreLogic and RP Data? Give me a chair, guys, a bit louder, that would be helpful, right? So what exactly CoreLogic or RP Data does? So what it does is, it gives you a value of a particular property based on similar sort of properties sold in the area and similar sort of properties for sale in the area, right? So we use this software called ADNA, and what it does is, it is the CoreLogic and RP Data of Airbnbs. It's the CoreLogic and RP Data of short-term rental listings. So what it does is, it gives us a realistic number around how much your property can make and earn on Airbnb based on live Airbnbs in the same area, right? So what did our number, our rule of thumb where we come into picture is non-negotiable, is we look at properties where we can get 10 to 12% rental return. What I mean to say that is, let's just say we buy, let's take the same example, a $700,000, right? Now we know we identified an opportunity through off-market, through a real estate agent network. We put into this filter and see how much this property can make on Airbnb based on live Airbnb comparable data, right? Now we know this property is going to make $70,000 on Airbnb. We reverse engineer the price. We see if we can buy it at $700,000 or less, we move to a further level of due diligence. If not, we give it a pass. This filter on its own kicks out 95% of the property that we put in. So this is what the basically graph look like. We put a number of properties. When we do the scan, we do the ADNA screen, only a handful of property comes out and ticks all the boxes. So long story short, to put it in a nutshell, you're not buying your next investment property. You're buying you an opportunity which has gone through a rigorous filtration process. Now, talking about, add a real life example to this. So, this one property we are negotiating for Tarun and Varun Bhai. So, again, appreciate it for you to organize this. Really appreciate it. So, we are negotiating this deal for Dhawan Brothers. And the whole intention over here is this property has got a main dwelling, existing dwelling, a granny flat, right? So now this property, if we are negotiating it, if we can get it for close to $1.1 million, it's a good deal because it's projected to make $150,000 on Airbnb. After all the expenses, your booking channel fee, management fee, cleaning fee and everything, this property is going to net 100,000 plus every year. So if you are able to buy it at 1.1 in the mark, we're negotiating very hard to secure this. If you're able to secure it, this property is going to deliver 10% net rental return. And the whole strategy here is, the way it works is the game of operational efficiency. I'll tell you about it. So this house is going to be listing 3 times on marketplace. One, the main house which can occupy up to 8 guests, it's a 4-bedder. This house which can occupy up to 3 guests. And combined listing which can occupy up to 12 guests. So these are 3 different listings. Same asset, 3 different demand pools. That's where the returns are coming from. Right? And now, this from a long-term rental, this particular dwelling is leased at $650 per week, and the granny flat is listed for $350 a week. So overall, the gross rental of this property is $52,000 every year. Now, on Airbnb, if we buy it at this particular price and manage it well, the overall revenue is going to be $150. After all the expenses, the investor is going to be left with $100,000 plus net. Whereas if we compare it with long-term rental, once you pay the management fee and everything, you would be left with $40,000 on an average. So as I mentioned at the very beginning, if you buy the right property at the right price and manage it well on Airbnb, the returns are 2 times or sometimes 3 times of what you get through long-term rental. And now the beauty of this property is it's on a big land block and it's got 2 street access. So if we are able to negotiate it, it's going to be a trophy investment for Jasper Advocacy because it's exactly the way we like it, which is cash flow now and manufactured equity through development later. So the property is going to take care of its own, leave $20,000, $30,000 every year into the pocket if you are able to negotiate this one. So again, we talked about the data and talked about capital appreciation and the cash flow side of things. So getting capital appreciation is, we look at data like vacancy rate, auction clearance rate, demand supply ratio, and that's the reason why we are very bullish on Airbnb and Tasmania. From an Airbnb lens, we look at average daily rate and vacancy and forecast of similar sort of listings in the area. So what we are getting is buying residential assets for growth and getting commercial returns leveraging platforms like Airbnb if we follow all this and make sure that we stay true and stay disciplined to the process. Now, we talked enough about what we do, how we do it, what we are trying to do, and what we have already done. Now, I'll give mic to Gary to talk about everything in a lot more detail and tell everyone in the room how exactly do we do it. Yep. Mic to you, Gary.
Thank you. No, thanks, guys. Again, really appreciate your time for having you here. So what we do is we do three strategies. The first strategy is move-in ready, and the another one is renovation. The third one is development. So I'll walk you through each strategy, and I'll share a case study where we have bought the properties, returns on investment, and how they're performing. So the first one is move-in ready. What we do is it works really well for SMSF or people who are investing their first property, don't have much cash. Let's say again, if you buy a property of $700,000, what we're going to do is we're going to do our numbers, we're going to do our due diligence, negotiate. Once our offer is accepted, before the time of settlement, we're going to design the property, how it's going to look like, what furnishings going to go in. Once we get the keys, we're going to furnish the property, take the photos, set the pricing, and then make it live on Airbnb. So that's what we do. Really good strategy, works for people who are early investors, don't have much cash, SMSF, because there are rules and regulations. Now this one, I'm actually very fortunate. So the owner is sitting right here. She's here with us. Thank you for coming. So we bought this property for Akash and Dilsi early last year or mid last year. So we bought it for 582. It was advertised for 600. Through our agent network, we negotiated hard. There were some issues, build and pest. So we bought it for 582. We invested another $15,000 on the furniture. It probably went on live on Airbnb within 2 weeks of settlement. And within the first 52 days, this is how much it generated. $13,000. And the annual revenue projection is about $60,000. So they're sitting at about 8% net. And we've just done a bank valuation for all the properties which we have bought in the last 6 months. Most of them, I would say 100% of the properties are sitting on about 17% growth. That doesn't happen. It only happened because we were early buying in Tezzy, right strategy, right assets, right network, local knowledge, and we identify those growing suburbs. Again, looking at the data, vacancy rate, auction clearance, etc. So that's the first strategy, really good, easy to go. Second one is cosmetic renovation. Again, really good strategy. So what we do is we buy dud property on a good street in a good suburb. What we do is we go in, make an offer, negotiate hard, procure the property at the right price. And then through our team on ground, and one thing I want to touch on is, so all what Bhavesh said, hospitality business, pricing, cleaning, etc. You don't have to lift your finger. This is all done. This is a one-stop shop. So this is done at Jasper Advocacy. All you do is once you come on board with the business, we take care of everything. So I'll come to that as well. Cosmetic reno, basically we don't touch any structural renovations. What we do is change the carpet, painting, upgrade the bathrooms. What else?
Painting, curtains,
blinds,
adding a furniture, basically adding some love to the property.
Yeah, and that's done. That's done basically intentionally, purely so that we can manufacture equity from the lender's side, and also we can set it up on Airbnb. So what basically we do is if you invest about $50,000 on renovation, that gives us roughly about $120,000, 2.5x returns. Like if you do really, really good renovation, you can get about 3x, which is really, really good outcome. And that's within 3 months' time. Next slide. So I'll share this example. We bought this last year. We bought it for $450. Dud property, cheap. No one was buying it. We went in. We saw an opportunity. We bought it for our client. And then we invested $65,000 on the reno. And this is how it looks. So before, after. Nothing fancy. Just basic, old houses, you just put some love and put some life into it. That's it. Now it solves two purposes. It gives us a really good appeal on Airbnb, and also from the lender's perspective, when they come in, this is what happens. So after 3 months valuation, the valuation of the property comes at 625, and that's $140,000 equity. It doesn't happen. Now this investor has got hardly any cash in this property sitting. This property is looking on its own. So we're talking about 70,000 revenue, 13.6 gross, and then after the operational expenses, management fee, cleaners, etc., they're easily making about 50,000 plus. So now they can just leave it in the marketplace for another 5 years, 10 years, borrow against it, let it grow, and they'll be making about $15,000-$20,000, even at 6%. This one is really my favorite. Like, I love this one. If you got a cash, and if you've done this strategy before, it's not for everyone. I should say that. It's not for everyone. It's bloody dirty work, boring work. There are a lot of risks, but I feel so confident about it because I've done it first. We've done it for our portfolio, and then we started going out and loud in the market. This is what we can do. So it depends, what's your risk appetite and how much cash you're sitting on. So for business people, I think, if you got a good cash flow, this is a really good strategy. Third one is development. Again, like, the fundamentals are the same. What we do is, we buy property, $600,000, $700,000. But what we look for in that property, like the front of the house is positioned nicely. You buy a land block of about 700, 800 or up to 1,000 square meter block. Front of the house is positioned really nicely, and then try to maximize the returns from that land. Granny flat. How good is that? Like in Sydney, me and Bhavesh been driving in an Uber and in a car. He said, "Oh, Gary, look at granny flat, granny flat, granny flat," because there's so much rental crisis, and everyone just been putting on granny flat. So we don't only do granny flat. What we do is we do multiple dwellings, if we can, because that gives us exit strategy. What you can do is you can put up another dwelling, and then you can sell, you can keep, or you can run both on Airbnb. And granny flat is really good for cash flow. So I'll share this one with you. This is like a trophy investment, and this is exactly what we're going to do once we are able to procure that property for Dhawan Brothers. So we bought this property for $815,000 in 2022. Beautiful property. It's got a water-facing deck and everything. We invested $20,000 on the furniture. Went live on Airbnb. And the very first year for an investor, it made $97,000 as gross. How cool is that? $97,000. And we went back when we saw, that revenue coming for our investors. We went back to them. I said, "Look, I've got a strategy for you. We can take it to $135,000, $36,000 a year." And they said, "How?" So repeat customer. What we did, there was a garage. No one was using it, right? Customers don't park their car there. It was just sitting there. It was a table tennis, nothing. So what we did, we saw an opportunity. We converted this 7x6, 42 square meter garage into 1-bedroom granny flat. Now this garage turned into 1-bedroom granny flat can have 4 people in it. Now the overall occupancy from 8 to gone to 12. Now again, what Bhavish said, we've listed it 3 times in the marketplace. So we're capturing the revenue from every point. So the first opportunity is if someone can book the entire house up to 12 people. That's a really good booking. Customer roughly pay about $700 a night. That way, you can keep the operational expenses a bit less. But if not, let's say people don't travel in that big groups that often. But we've got you can stay for 4, still charging about $250, $300. Really, really good. And then front of the house, 8 people. We've invested about $80,000 on the garage conversion because the structure was already there. All we had to do is put through the D application through the council, do cosmetic renovations, put a bath, put a kitchen, etc., etc. And after 3 months' time, we went back to the bank. This property was financed at $850. Bought it for $815, went up, financed at $850. Went to the bank after 3 months. Once this was completed, they valued it at $980. So solved 2 purposes. One is manufacture equity. We don't care how the market is going. We've manufactured the equity. And we're still buying in the growth market, Tasmania. And the cash flow, love it. Again, we don't sell anything that we don't do it for ourselves. We've done it day in, day out for our portfolio. That's how I managed to leave my job. That's how Bhavesh managed to leave my job. My wife is there. That's how she managed to leave a job. So proud of this. A lot of people want to get out of this 9-to-5 gig, but it's hard. But I am so fortunate, or we are so fortunate that it gave us an opportunity. Now, what we are doing for Jasper is, so we bought this So we bought this land. It's 1,000 square meter, 1,060, 1,050. What we're doing is we're putting 3 townhouses right next to the water. No one was buying it. We saw an opportunity. How? Because the one thing is I lived in Tassie for 10 years. So I know the place really well, pretty much on the back of my hand. I've driven taxis, Uber, worked in restaurants, pubs, went to uni, played cricket, umpired in footy. So now we've got really good links with the developers. We buy this land on builder terms. Doesn't happen in retail. We don't have to pay anything for 12 months. It depends on the negotiation. So we're going through the DA. What we're going to do is we bought the land for about 385. It's going to cost us about 400 building each townhouses. So the total project cost is 1.6 million. 3 townhouses, and the comparables in the area are around 700, 750. But the product that we're putting in, that's going to be worth 800. And it's up to us whether we're going to keep it or whether we're going to sell it. But we can borrow against the equity that we're going to build, or we can just flip it. And the cash flow, it's going to be really good. So that's what we're doing, and this is the proposed site plan and everything. So it's just going through the development application with the council, and then we're going to start digging and doing what we do. Pretty much to the end of it, and then we'll just go to the Q&A, which I'm most excited about. So for example, see this one. So people say, what's the percentage of the bookings you get your Airbnb customers from? How many tourism? So we said, look, it's about 40%, roughly 40%. And the question is, where does the 60% comes from? People like Mohammed. So Mohammed wasn't staying in this house. So his niece or his, cousin, so she moved from Indonesia for Alicos. So she was here, she was in the uni, she was doing this 3 months Alicos. Because the vacancy rate in Tasmania right now, about 0.4%, deadly red. So she stayed with us for 3 months, for 92 nights, and this is how much she paid, $18,000. And upfront, from business perspective, how good is the cash flow? Again, another one, this is a tourist customer. For 7 nights, they paid $6,000. And people do pay this much money. $5,000, another one. And then these are the reviews. And this, again, coming back to Bhavish's point, when he said, this is only possible if you buy it right, set it right, operate it right. And that's where Jasper comes in the picture. It's not only us. It's a mechanism, and I'll show you how. And again, we've done so much blurb, this, that, number, data, but you don't have to take our word. What we do is, once you come on board with the business, we start working together. We put together in a report. Once we identify an opportunity, we put together on a piece of a paper, data, what's our recommendation is, why we say this, that, etc., followed by appendices. That's got your bank valuation, AD&A report. If he's saying it's gonna, we're gonna subdivide the property, report from the council. That's what we do. We give it to you. Say, guys, sit on it for half a day. Let's connect in evening when it suits. And if you all are on the same page, we will go and start negotiating. So we start negotiating, make an offer, and once we are able to procure, and then the rest of the process starts. Again, it's not us. We can't do everything. We are the face of the business. We do this pitch to our investors. We do the strategy, but these are the superstars behind us. They are all around the globe in this day and age. Some of them are in Tassie, some of them are in Melbourne, few are in Philippines, India, all over the place. And this is what we achieve through these young kids, including us. Super proud of this team. We've been running this business for 2 years. We don't work for quantity, we work for quality. So it's not us, we want to onboard 15 clients a month, right? No, that's not the motive, the quality. Just rinse and repeat. And the long-term plan is doing, big developments, create a syndicate, so that, if you earn your, if you make you money, if you make $10, we make $2, and we earn your trust, then we just go and do big developments, what we want to do. Pretty much to the end of it. Is there any more slides?
That's pretty much it. Just to add to this, talking about the team, We are all playing sport, and we are not playing table tennis or tennis. We are playing cricket. So we have all the people you see in this picture is the backbone, the team behind it, and we are able to achieve it because of the complementary skills that we all have. We are working for the same scorecard, which is delivering significant amount of value to you guys. So it's not just us; it's a team behind us.
That's it, guys. Thank you. Now, this is going to be really fun part. I know there might be a lot of burning questions. So what we're going to do is please raise your hand, tell us your name, and then ask your question. We'll answer that question for you. And then if you have a counter question, keep it raised. We'll come back to you. Sounds good?
You initially mentioned that you're focusing in Tasmania and regional Victoria.
That's right.
Are you guys planning anything in New South Wales as well, or is it just mainly the operational focus in those two areas?
It's a very good question that you ask, and the whole intention is the opportunity cost, right? The reason we work together, or you hire us, is to take the emotions aside and look at purely the data and the growth, right? So right now, as we're looking at the data, vacancy rate, demand-supply ratio, rental yield, which make any suburb, I'll answer your question in a different perspective. We are all in the real estate market here, right? What we have seen in Brisbane, what we have seen in Perth, it doesn't happen. It doesn't happen in real estate. Property growing double-digit year on year, and in some cases growing double in value in 3 years' time. So it's never happened with real estate. But the reason it happened that time in Brisbane or Perth, because of the same fundamentals, and the same fundamentals are lying in few pockets of Tasmania where we are bullishly buying, keeping all the emotions aside. I hope it answers your question. And down the lane, we are not emotional to Tassie. We will set up our shop where the growth is. Yes.
What else, when it comes to Airbnb management, what services do you provide when it comes to Airbnb management?
So it's end-to-end services. So you're looking at from designing the property, how it's going to look like, and what furniture is going to go in, whether you put it. So what we do is basically, we because we've done it for our portfolio again and again, we set it up really nicely. We put a spa, not $5,000 spa, just $550 spa from Bunnings, inflatable, and does the job, right? Fire pit, and then we furnish it. Our team price it dynamically, and then we take care of all the cleaning, etc., etc.
Hi, my name is Jahangir. I just have a quick question. So, when it comes to management fee, which you're gonna charge, how do you charge? Based on the gross or based on the net profit? Let's say that if I purchase something and if I don't make what I expect, let's say that if I'm in negative, so how do I pay to you guys, or what's your contract in sort of that scenario? Is it based on gross or the net, or what's the percentage?
So it's a very good question that you asked, Jahangir. We work on a revenue share basis, right? If your property make $10,000 a month, we charge $1,800 and the remaining amount goes to you. So because we are working on a revenue share basis, we are equally vested to the best performance of the asset. So in a way that because it's on a revenue share basis, to answer your question, it's on a gross revenue that you receive, and we are equally vested to make sure that it performs as good as possible on the marketplace. You want to add something?
Yeah, so the gross revenue minus the cleaning fee. So you don't take commission on the cleaning fee. So you pay on the gross. So that's what Bhavesh meant. Our job is, if we got a property under our portfolio, we want that property to make $100,000, because that's where we're going to make about, our management fee is 17% plus GST. That's where we're going to make our management fee. Again, the focus is not on the management side. That's the add-on service we provide to our investors, so that they don't have to go anywhere else. 8 months ago, we were not even doing management side of the things, right? We were buying properties, giving it to the management companies, and there are a number of management companies out there. But we got a feedback from our investors. Guys, you've sold this concept. We bought a property through you guys. We are busy in our lives. Now manage it for us. That's where we, took this, and then we just invested in this management company, and we've started managing for our investors as well.
Just to add one more thing, talking about this, Jahangir, this sort of returns, this sort of numbers are coming from, again, we are experienced, but you don't have to take our word for it. We are super host on Airbnb, and it means something. What it means is we are consistently delivering great, like great customer service to our clients, and we are consistently getting 5-star reviews. And this superhost status is not something that you achieve and then you set and forget. You have to consistently deliver that sort of reviews, that sort of customer service, so you maintain that superhost status. So that speaks a bit out loud in terms of providing you good enough confidence to work with us if you're planning to.
Yeah, thanks. Thank you, Bhavesh and Gary.
Bhavesh and Gary.
Bhavesh and Gary,
Yeah.
sorry. Sorry, it's a half of the sleep, and we are some of us fasting. So I've got a few quick questions. I'm just trying to get my head around it. So your business is like part of it sounds like buyer's agency.
That's right.
Part of like a business consultant. Like when you're trying to sell, like manage the operations, something like this.
That's right.
So which part are you like more experienced on? Like I'm just trying to get my head around it. Is it like a buyer's agency or?
So we are buyer's agent, and we have been managing, as I mentioned, we have been hosting properties on Airbnb for good 4 years now, and we are buyer's agent, and that's the kind of value that we bring to our investor like yourself, seeing the industry from other side of the table. So to answer your question, we provide you an end-to-end solution as a company. We buy you right asset, looking at the data, and then our sister firm, Tazzy to Metro, manages the property. So
in terms of like all the charge and fees, so you have a buyer's agent, there's a different terms and conditions in terms of fees, and then you have operations, there's a different terms and conditions for the fees.
That's right.
Correct? Yeah.
So it's a bit of a niche. I haven't seen this kind of collaboration as of yet, even online. So it's end-to-end services basically. All you do is you trust the concept, understand the numbers, and once it makes sense to you, you just trust us.
But I don't have to hang around for the whole contract, right? So for the buyer's agency, you buy property and then I can do whatever I want it.
Yes.
Yeah, absolutely.
And the other part is I want to go with you, and then you take it over the property and go for the Airbnb.
That's right.
For the Airbnb, do you then advertise on your own company name, or are you gonna advertise on my behalf? So people are gonna rate me or rate your company when they
A data company.
rate your
Yeah. So it's under our because we are Superhost, so it's going to be under our portfolio. We're going to be the management company which will be running it, and what we do is we list it on all the platforms: Airbnb, Booking.com, Stays, VRBO, Google Vacation Rentals, and then we run Facebook ad $50 a day to get direct bookings.
What if I don't want to do it? For example, I invest a lot of money, I buy really good property, but you also have some clients who doesn't have the best property, but it's going to affect my property as well, because it's a combination of one pool now, it's just company, right? I also have that option as well.
Yeah. Yes. So you're not bound to stay with us once we buy you the property. You can go to any management company, whether it's Rain and Horn or Wolf or XYZ. But again, going back, reverse engineering, we only buy properties when Bhavesh mentioned 100 properties and then shortlisted it to like 2 or 3. We only buy properties which we think gonna make sense. So we don't buy properties which are not, because otherwise it's just a hassle for us. If you buy a dead property who's not going to perform, why would you hire a person in your team if you see it's not going to work out for you? So we won't. So strategy is done at the start, and then we know if things stays like this property will be it'll make good return on investment for us and for you guys as well.
And I'm not sure like how much you charge. It's like a standard price, which you can talk about later a little bit. But usually my understanding is I've been through like few buyers agency.
Right.
They charge like arm and leg. I don't know why is that for, but usually these days with different software can pretty much pick it up. Pretty good deal. But we can talk about that later.
I mean, it depends how much time you have. Look, it's not a rocket science what we do, guys. It's not a rocket science. You guys can do it. But again, accountant, lawyer, and if you have to leave your day job and have to do this, then it's like active business. That's where that's where good buyers agents comes in the picture, and we buy you in the right spot where the growth is. For example, some big boys, they just want to play in the backyard, right? A lot of people are here who just don't want to get out of New South Wales. Right? They want to buy $1 million, 1.2, 1.5, $2 million asset. We can buy them 3, we can buy them 2, and that'll make them more money. And not in Tazzy. In Tazzy, we're going to be there for next couple, 2 to 3 years. We bought properties in the last 6 months. They're sitting on about 17% growth. So 582, we bought it for Dilsi and Akash. It's sitting on 684, $100,000. And they didn't even lift a finger. So that's the value, and that's where you pay your arm and leg. I wouldn't say it's arm and leg, but it's still it's.
Been to some of them actually. I mean, look, for me it's probably different. I work as by profession I'm a university lecturer, and my early career started with financial analysis.
Nice.
So it was pretty easy for me, so I just picked it up. But sometimes I didn't have enough time to go through, and then I sit down with some of them and they're charging. I said, okay, I'm in profession, I could have done this as well.
And look, you are exactly right. You can do it. There's not the opportunity as well. Like, you know, you can look at the data. Now we sit in the market all day. What we do is we just breathe, and, you know, every single day this is what we do from, you know, 9 to 5 or 6. So you get opportunities. For example, the one that we're looking for, Varun and Tarun, you know, we knew it's going to come to the market, right? We knew it's not going to, you know, not everyone's going to be looking into it, not the local people. But we have a strategy. That's where, you know, we are negotiating hard for them directly with the owners.
Yeah, wish you best of luck. And Varun is always good. Always good. Thank you.
Sorry, my name is Saurabh. Quickly, talking about Daisy, do you guys have your own team over there to do the cleanup and whatnot, or you're subcontracting somebody else?
So before we went out loud in the market, we've been buying since last year, June, where no one was even talking about Tassie. But we invested a lot of money and time in educating ourselves, looking at the data, as Gary mentioned, that what we do is not a rocket science. Like, we are not making a rocket and sending it to Mars. We're just looking at the data. And if you can spare out 50, 60 hours out of your life, you can do exactly the same, with right intent, of course. But we looked at the data last year. We identified a growth opportunity, and then we went there, spent good 3 to 4 months having a team in place. Tradies, renovators, property managers, architects, surveyors. Once we had that, once we had confidence that, okay, we have seen good results with our own investment, then we went out loud in the market that, okay, we have done it, now we can, you know, do it at scale.
So saying that you have your own, talking in terms of Airbnb, most important is the cleaners.
Yeah. Yes.
They're your eyes, they're your workers, they're your hands. So you have your own cleaners there who go into the property or manage it.
That's right.
For you guys.
That's right.
So most of the cleaners are subcontractors, but we got a property manager there. She's like a, you know, eyes of ours. She goes in, you know, she look after the guests. She look after the property like an inspector. That's what she does, and then she manages the cleaners as well. Some of them are on our payroll, but 60% are outsourced.
So it's talking about $1,800 out of whatever X amount you're earning. So I think it was 10,000, 1,800 out of 10,000 is yours. So that management cost is included in that 1,800, or that is on top of the total income, what we have to pay you, commission or management fees, or that falls part of that 1,800.
So basically, if the property makes $70,000, we'll have 18.7%, which is about 18,700. Yeah, and the cleaning fee is separate. So what we do is we don't charge commission on cleaning fee. So when we advertise it on Airbnb, we just say, you know, the guest, it's going to cost you $240 to clean the property. So that comes in, doesn't count it as income, just goes out to the
Very variable cost. Again, to put it in a nutshell, the way we started it, we identify properties where we can get 10 to 12% rental return, that is gross. When you take the management fee, the booking channel fee, the cleaning fee, as an investor you're left with 6 to 8% net rental return. So that's where this $20,000.
All that is on top of that 18.
So that 4% gap out of 12 and 8 is the same what we're talking about.
That's operational expenses.
So with a long-term rental, you have a lease agreement, which is a legal document that guarantees your income towards your mortgage repayments. Is there anything that you guys do that kind of protects the rental income? So, sure, I think you said like 70% is like the occupancy rate, but is there anything that kind of protects that, so that I'm guaranteed income to repay, because we're all probably going to take out loans for the property, so we need to meet repayments. So is there anything that protects that?
Look, not really. I'll be blunt. I'll be honest. Not really. There is no guarantee for that. And just to say there is a guarantee, and that's the history, the stats, the properties that we're looking at, and that's what we do at the start when we identify an opportunity. We look at the comparables in the area. So we not only look for the comparables. Like when we go to Tassie, so the population of Tasmania right now is 550,000 people, and 55,000 people are on tourism jobs. So government itself is a stakeholder in the business. So these are the fundamentals behind it. They've invested 135 million on the airport upgrade so that they can bring direct flights from Singapore, Hong Kong. It's ready to go. So that's investment done, but they're not getting return on investment as of yet because it's still, they're working on the roster, etc., etc. So yes, there is no guarantee on paper, but again, you don't have to take our word. You just look at the stats, the data when we give you the report, and that's the risk you take. If that's the risk you take as an investor. It's not really a risk, but that's the risk. So one more. Sorry,
just to follow up.
Yes, please.
Based on the numbers that you had, it was 70% occupancy. What's like the average of your clients, like the occupancy rate on an annual basis?
Minimum is 70%.
That's the minimum.
That's the minimum. If it's not,
Sorry to cut you off. That was the average case scenario. There are best case scenarios, but we can't take it as a standard. We have got properties where we are getting 14% rental return, but we can't be out loud about it, like if we're going to get you this, but it's like best case scenario. But the $300 average daily rate that you look, it's a average case scenario.
Yeah, but I'm saying the 70% occupancy. So
Yes.
I'm guaranteed, not guaranteed, sorry, but I'm getting income regardless.
Absolutely.
Yeah.
Rishi?
I actually just wanted to ask, obviously, like, in Tassie it's going to be a bit more seasonal kind of stuff. So, let's just say that it will be like 6 months, like, it will be like a dead period and stuff. So, like, can you, like, put it on, like, normal rental and then, like, 6 months you can just do, like, your Airbnb and stuff?
to answer the, yeah.
You put it on short-term rental and you see the results and then you judge for yourself.
And the worst of long-term rental is better than, like it's still far better than, like if your property is getting rent out at about, even at 50%, it's still better than long-term rental.
So what he's saying, the worst, like the best case scenario, let me get that thing right. The worst case scenario.
The worst is long-term rental.
So the worst case scenario is still better than the best case scenario with long-term rental.
It's a better way to put it. Sir, any question?
How easy is it to sell the property?
Again, it's all residential assets.
No, see, you're converting the garage into your one bedroom or whatever.
That's right.
When someone is going to buy it, they need a garage.
That's right.
So how easy will it be? Then again, we need to convert it to garage.
No. It's again like we had a great learning experience with dealing with council, and council would have only allowed to convert that garage into a granny flat when the property has got enough parking space. So if you look at the property, irrespective of the garage, you can park 4 cars.
I know you can park, but still some people, they are very adamant and said, okay, I need a garage. So
Then for that particular buyer, that's not the property. I mean, it would
will
be.
it be easy? That's what I want to know. Will it be easy to sell the property?
But at the same time, so obviously it's not for everyone then, but for an investor, it's just, and even for like if I'm taking a mortgage of $800,000, my repayment is going to be about $50,000 as a PPOR. If I can have a granny flat at the back, if I can compromise a little bit on my lifestyle and not having a garage to me, that's an income generated asset for me. Again, you do take out some of the buyers of the pool. But I still feel a lot of people will still take it in this day and age, the way of cost of living and everything is going.
And again, so you talk to a lot of people. We do the same for our business. And one thing we have realized is there is nothing right or wrong when it comes to investment. It's very subjective. What could be right for you could be wrong for me, and vice versa, right? So our whole job is to understand what you're trying to achieve and see if we are able to achieve that. We get in business. If not, then anyway, good having a chat.
Amit?
Do you also sell
Sorry.
properties? Or
No,
just
we just buy.
And yes, one more thing, we don't have anything to sell. So we go out in the market once we have brief from you. But we do get deals all the time from real estate agents being in the market. Hey guys, this is coming off the market. I've just appraised it. If you got a buyer, if you can make a quick move, let me know. Amit?
Hi.
Hi.
My name is Amit. I'm based in Sydney. So, as you guys mentioned that there are so many good pockets in Tasmania. So, which pockets would be good for Airbnb? And as far as cash flow is concerned, that the property also grows. And with so much competition in Airbnb, how does our property stands out against so many properties? Because, for example, if somebody wants to visit Tasmania and they are looking for a property on Airbnb, with so much competition and so many properties, how does our property, stands out?
No, good. Look, really good question. So, what basically Amit is asking is there going to be a saturation point? That's what happened in Docklands, CBD, lots of properties. To answer that, and we get this question like very often. You're buying so many Airbnbs. What's going to happen to us? Fair enough, but right now people are paying about $7,000 for 7 nights. $1,000, for 1 night in the hot period, which means that's very expensive. There's still a lot of potential. Tasmania as a tourism, they still haven't hit their peak. So they have come in, top 50 places to visit in New York's time every January when they release the list. People are not coming to Tassie because it's bloody expensive. They don't have enough ferries. They don't have enough flights. Sometimes it costs you about $600 to go to Tassie across the ditch from Melbourne. That's what government is coming in as a stakeholder. Extending the runways, putting money in tourism so that they've partnership with, there's a direct flight from Auckland to Hobart. They have bought the seats already for 6 months. They said if you don't hit the 60% occupancy or 70, I don't know the number, then we're going to pay you. So they're making it affordable. New ferries are coming, runways are getting better, direct flights are coming. So it means there is still scope for a lot of tourism. Answer your question? Yeah, thank you.
Just to add again, one more, it may sound a bit repetitive, that why our Airbnb performs better than the marketplace. Again, we are super host, and to be super host, you have to consistently deliver that sort of customer service, have that sort of 5-star reviews in place, and that's where you maintain the super host status. You just can't have it and then set and forget. You have to consistently be on top to maintain that status. So, yeah, I hope that answers your question.
Anything else? Yes, please.
One last question.
No, absolutely.
What's the minimum investment I'm looking at? Because considering we look at the data every day and the prices keep going up because people are moving to Tasmania market since boom has happened, and considering we're not buying only any property, we're buying Airbnb specific property, so it has to stand out as well. So because we have served so many customers already, so what sort of minimum, what's the entry point if someone has to really consider that option of buying in Tasmania? Like where you can get a good property for the good price range.
Yeah, look, I always say to investors, give me a open hand between 700 to 800. It's a really sweet spot to begin with. But again, if you have a budget of $1 million, we can get you better returns. The returns, 10% on $1 million going to be about $100,000. 10% on 700 is going to be 70,000. But yes, the entry point, to answer your question, 700, 750, 800 is a really sweet spot. Give us a budget between that. We're going to try to stick to 700. But if anything that comes up and we see a lot of value in it and it's 800, we're still going to make a move.
I have one question.
Yes, please.
In terms of the loan, to get a loan, how you treat the house? Is that going to be as a business or?
Just like your old way of traditional investment, from a serviceability point of view, your lender is going to ask local real estate agents rental appraisal. So we're going to use that for your serviceability, and you're basically buying a residential asset as an investment property, and you're leveraging platform. Once the property gets settled, then you are using Airbnb. But before that, the process stays the same.
And then the money you generate, is that going to be another business or is it going to be personal, like the traditional investment, like when you receive the money, as you said?
So, do you own any investment property right now? So, you have your property management company in place, right? Just like we act as a property management company, we'll give you a statement of a monthly statement, and you get paid first week of every month.
So if you buy it under trust, it'll go to your trust account. If you buy it under company, it'll go to company, personal name, personal account.
So just to delve up kind of on the same question. So serviceability is based on long-term income?
Long-term rental appraisal, that's right.
Okay. Yeah. So even if it's like positively geared, it won't really help your borrowing capacity.
At the time of purchase, yes.
Okay.
But down the lane, you can, of course, refinance based on the cash flow.
Any brokers in the house?
There's another way to do it. You the broker?
No, Mr.
Oh, sorry, I was surprised.
You're the broker?
He's gentleman is power broker.
Yeah, you're a broker. I think how it works is, to answer your question, again, it's, I'm not a financial expert or whatever that
Disclaimer, legal
disclaimer
disclaimer.
is. But how we've done it for our portfolio is, you buy it under an entity, like a trust or a company, and then make it a like positive geared trust or, company. And then there are lenders out there, if your trust is generating money, then some of them don't just don't assess your liability basically. So it becomes, you can recycle it. Again, it's not that easy. If it's easy, everyone would do it. And it depends, then you come to, professionals like here, accountant and broker. Yeah, they make it happen. Is that right? Yeah.
You want to add something to it based on your experience?
So only lately some of the banks they stopped doing that one, like especially big banks,
Big trust,
like Macquarie Bank, CBA. So that's going on in market for last 2-3 years, and I don't know, for some reason, still a lot of banks are doing, but
Yeah.
some banks are not doing that.
Mainly the big banks.
Yeah,
Yeah.
the big four have.
Especially
some-
the way you told
the
that
trust and everything.
you can set up a company and you can do it. Yeah.
Yeah. Amit?
Since we'll be purchasing our first investment property, so what according to you shall we do? Like, shall we be purchasing under our own name, or shall we purchase under a trust's name, or a partner or a firm or something? And what about the tax deductions
Mhm.
on the investment property?
Yeah.
So if we buy the investment property, will that be will the expenses be tax deductible, and what about the income?
Yep.
That would be added to our gross income.
Yeah.
So how to go about it?
I mean, again, as Bhavesh always says, there's nothing right or wrong. You need to sit down with your accountant and then chat to them what's your profile is. If you're on a high-paying job, making 200, 250, then it may be worth going on your personal name. Obviously, on trust, you cannot do negative gearing, etc. I mean, you have to go to specialists, so they can tell you, buy it under a company, buy it under a trust, buy it under your personal name.
So again, Amit, if you were licensed around it, we can do 1 hour whole presentation around it. It's a big, broad topic around.
But yeah, accountant would be the best person and easier.
You can have a chat with him.
I feel this is valuable. This is making sense. Yeah.
Question: how is the weather in Tasmania? Like in Brisbane, we know like a lot of floods come and insurance. Some areas the insurance is too expensive. So what about Tasmania?
Can you want to answer that? You lived there for 10 years, so.
I think it's like Melbourne. If you know how Melbourne weather is, I mean, it's chilled. It's quite chilly in the winter, and it's hot. But there are not many. Like, it's one of the driest state in the country, so we don't get many floods. Bushfire is
Just breaking off fast.
absolutely.
No, absolutely. Please.
Bushfire is the concern if it's too hot, but otherwise it's pretty standard. Yeah. Rishabh, any question? Oh, good. Anything else, Amit bhai? Aap, Shinu? Yeah. I mean, that's the beauty of it, right? Just, one person asks and everyone's, questions get answered. Yeah. That's pretty much one-to-many pitch. Yeah.
Thanks for your time, guys. Appreciate it.
Thanks.